Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, trade tensions continue. How can Canada use leverage to get a deal? And creating the right environment for homegrown business success. Plus, young people want a home. They just may need to downsize their dreams a little. That's all ahead. First, for the week that was in business, it's time for the briefs. The Bank of Canada lowered rates again this week to 2.25% as business concerns about the trade situation continue. Economists widely expected the move, although a surprisingly strong jobs report in September, coupled with inflation that remains higher than expected, might have made the case for the bank to hold steady on rates for now. The concern expressed by the bank is a continued deterioration of the economy because of tariffs. There was no progress on talks between Canada and the U.S. this week as the fallout from AdGate continued. Hopes for a resolution on steel and aluminum tariffs faded. Ontario's Premier Doug Ford defended the ad, while the U.S. ambassador said Canada had only itself to blame for the end of talks. Trump has threatened an additional 10% tariffs, although it's not clear how or when those would be applied. Canada will take advantage of a meeting this week of G7 energy ministers to shore up supplies of critical minerals. Energy Minister Tim Hodgson said announcements will be made on Friday and aim to secure supply chains and focus on investments in mining and processing. In a first-of-its-kind agreement, Cameco and Brookfield Asset Management are partnering with the U.S. government via their jointly owned Westinghouse Electric to build nuclear capacity across the U.S. The deal could ultimately see the U.S. government own up to 20% of a publicly traded Westinghouse and meanwhile be in control of the permitting process for nuclear facilities across the U.S. Health Canada this week approved a new drug that slows the progression of Alzheimer's disease. Lecanemab is the first of its kind in Canada aimed at targeting the underlying cause of Alzheimer's. It's already approved in the U.S. and comes at a high cost there of about $26,000 a year. And those are your business briefs. A new critical minerals partnership aims to secure supply among G7 countries. Canada is in the thick of it. We spoke earlier with Tim Hodgson, Minister of Energy and Natural Resources. I asked him about the aim of this agreement.
We have been talking about the risks for critical mineral supply chains for some time. Our Prime Minister fully understands that the G7 was created back in the 1970s because the world faced threats to the supply chains of energy. And at the time, the G7 was created to respond to those threats. And what happened is the G7 didn't just talk, there was real action. Our Prime Minister said at Kananaskis in his capacity as president, it's time to act, it's time to do, and stop talking. What he got was an agreement from the other members of the G7 to work on the Critical Minerals Production Alliance, or the Buyers Club, as we call it, for simplistic terms. And between the summer and now, we have been working to go from talk to reality. So what does that mean? Canada, in taking a leadership role, has been engaged with the other members of the G7, plus other like-minded democracies who've asked to be part of this. And the Prime Minister has talked about a few of those, to make this real. So what did we do? The first thing we did was we had each country appoint a critical minerals envoy. So they are the focus point in that jurisdiction to trying to correct these supply chain problems. And then we started working on real tools, real things like offtake agreements, like stockpiling agreements, like enabling critical minerals infrastructure, roads, transmission, ports. We looked at, where appropriate, equity, debt. We looked at potential price support mechanisms. Canada looking at all of those potential tools as a way to move from talk to making critical minerals available, and encouraging our allies to do the same. What we hope to announce on Friday, or when this airs, is a series of real steps by all of our G7 allies and plus some of our other allies showing that working together, working collectively, working in a multilateral way, we can bring critical minerals from ideas to reality and strengthen our supply chains, create the fair, secure, and sustainable supply chains we need as democracies.
I also asked Minister Hodgson about the recent investment by the U.S. government in two critical mineral companies in BC and whether Canada is opening itself up to vulnerability.
I guess I would say a few things. First of all, the U.S. remains an ally, and we have every hope that that will continue to be the case for a very long time. They're our biggest trading partner, and while we're very keen to expand our trading relationships and grow the percentage of our relationships with other countries, we in no way want to reduce our activity with Americans. So we're good with Americans being involved when it's a net benefit to Canada. In the two situations you're talking about, the U.S. took minority stakes in countries. We have something called the Investment Canada Act. If we were ever to believe that an investment by another entity, a non-Canadian entity, was not in the net for a net benefit to Canada from either an economic perspective or a national security perspective, we would act. I think looking at those two situations, we don't think they are a concern from a net benefits test.
This week, Cameco and Brookfield made a novel deal with the U.S. government that could tie up uranium supply. I asked Minister Hodgson whether we should be using access to uranium as a bargaining chip in our ongoing trade talks.
Cameco is a great Canadian company, a great Canadian success story. Little shout out. I had the privilege in one of my former lives of taking Cameco public on the New York Stock Exchange. So a company that I know well. A great Canadian success story, which sells their product to allies around the world. Cameco is probably the most international supplier of uranium to our allies in the world. This agreement, I expect, would result, and Cameco will have to speak for itself, in an increase in production at Cameco's operations in Saskatchewan, which I think is good for Saskatchewan, good for Saskatchewan workers. Probably increase in activity at some of their processing facilities, which are in Ontario. Again, good for Ontarians, good for Ontario workers. We have been clear with the Americans that we believe in free trade. We believe access to our critical minerals is an important part of our trading relationship. Our goal is not to increase barriers in sectors. Our goal is to bring them down. As I think you know, the Prime Minister and Mr. LeBlanc and Ambassador Hillman are leading the conversations. The conversations we are having are around our energy, our critical minerals, and how do we get a collective agreement which results in the best deal for Canada. We continue to have the best deal of any country in the world. We want to protect that deal, and we want to reduce the frictions where we have it. Access to our energy, access to our critical minerals, are cards in the card game.
I also asked Minister Hodgson about the current state of trade talks. It feels like Ottawa is playing good cop to the province of Ontario's bad cop, and whether he's confident that we are headed for a deal.
First of all, I would just say that what I see is all of the provinces and the premiers on a Team Canada, a collective agreement. We're all working for Canada. I think we see individual premiers doing what they need to do, which is stand up for their constituents. But we fully understand that the premiers are all on Team Canada, and we're stronger together than apart. But I think we are moving forward. As the Prime Minister said, we're ready to sit down with the Americans when they want to sit down. I think Canadians understand that negotiating with this administration is not a straight line. It is not a linear progression from disagreement to agreement. It's sort of a back and forth. I've used a number of sports analogies. Go Blue Jays. I'll use a baseball analogy today. I don't know if we're in the fifth inning, the sixth inning, the seventh inning, bottom of the eighth, top of the ninth. I'm not exactly sure. I hope it's a 9-inning game. We had an 18-inning game the other night. But what I can share with your viewers is the Prime Minister, Minister LeBlanc, Ambassador Hillman are relentlessly focused on getting us to a good outcome. We're going to get the best deal for Canada. We're not going to sign any deal. We're going to sign a good deal for Canada that protects the best deal in the world that we have today and seeks to reduce those irritants where they exist today.
That was our conversation with Tim Hodgson, Minister of Energy and Natural Resources. Coming up, turns out it's not just that houses are unaffordable, we're not building the right ones. Stay with us. Welcome back. Home ownership still feels like a distant dream to young Canadians. Here's a look by the numbers. New data from CREA show that 65% of the Canadians who don't currently own a home still want to buy one. For context, 68% of Canadians already own a home, with baby boomers the largest group. They make up 40% of all homeowners. But 86% of Canadians aged 18 to 29 are looking to own a home. That makes it a key life goal, despite affordability issues. While the single detached home is still the goal for many, young people are willing to adapt to the market. But semi-detached and row houses account for only 10% of housing stock. That compares to more than half for detached homes and 35% for apartment units. And the real problem is those more affordable homes are a lot less livable than in the past. In Toronto, the median condo size is now 640 square feet. Compare that to more than 1,000 square feet in the 70s and 80s. Some of the new homes, built since 2016, are purchased by investors rather than owner-occupiers. The total rates of new homes lived in by owners is now at 59.6% by 2021. That's down from 71.5% in 2015. Well, the answer to Canada's housing problem isn't just more of the same. It's obviously about building what's needed. Sean Cathcart is Senior Economist and Director of Housing Market Data and Market Analysis for the Canadian Real Estate Association. Sean, thanks for being with us.
Sure thing, Amanda.
So it's almost frustrating to hear that, not only are we not building enough, we're still not getting the mix right. And then when we are building what would be considered the right mix, they're not the right size and shape to accommodate. Obviously, hopefully this data points us in the right direction to make changes. But from a policy point of view, what could help loosen up some of the change we need away from the wrong type of housing?
Right. Well, the federal, we know we have the Housing Accelerator Fund, which is one such lever that the federal government can use. But there's a lot of money that goes out of the federal government for a lot of things, provincial transfers and through CMHC. That sort of approach could be applied to a lot more money with housing KPIs attached that not only incentivize unit counting, which I think is what the trap that we're risk falling into here, where we double construction, but it's all the wrong stuff. Because that's what we're doing right now. 70% small apartments, and all of these young people say, I want to own a house that I can raise a family in. So that's one way. Another way would be to potentially adapt Build Canada Homes, if maybe not that first tranche of $13 billion. I understand there's another $13 billion coming behind that. And market housing is 96% of the market. Supportive housing, social housing is less than 4%. If we can get that up to 10, that would be great. But it's never going to be big enough to actually solve the meat and potatoes of this housing crisis, which is in the market.
We alluded there to the role that investors are playing in the market. Obviously, they've been playing a role, certainly in some of the big urban centers. We know that's true in Vancouver and Toronto. Can we change that? Would policy that took them out of the equation start to shift the types of things that get built?
Well, it seems like they're taking themselves out of the equation these days. But, when you've got a project that's going to take 5 years to build, but there's a financial requirement that you have to sell 70 or 80% of it in the pre-sale stage, you're probably not going to get the first-time home buyer that's willing to wait 5 years to move into the thing. So you've got investors lined up around the block to buy these things who pay by the square foot and are never maybe even going to step foot in the thing. That's what happened in Toronto, to the point that you're basically building hotel rooms. Mm-hmm. And once again, if our only KPI on these programs going forward is going to be unit counting, the easiest way to get that is to build more like the way we have, as opposed to the types of things that are actually going to be suitable and make people happy in the long run.
We've only got a few seconds here, but are you surprised that the dream of home ownership persists for young people, even though all they hear is it's unaffordable?
Absolutely not. I think one of the things that came out of the polling was it's not about the house. It's not about 4 bedrooms, 2,000 square feet. It's about the ownership tenure. It's about having your name on the title. It's about paying yourself as your own landlord and having a finish line out there where those payments stop someday and you live in your golden years with rent-free. Everyone understands the value of that. And when we ask 20-somethings, 86% of them say they still want that. But as you alluded to, when you look at the homeownership rate for, say, 30 to 35-year-olds, it's falling off a cliff. It's less than half are able to do that these days. So we've got a major problem here, and we really need to turn that around. But before we sort of light the boilers on this billion-dollar effort, this moonshot, we better make sure we're pointing in the right direction.
Sean, so good to have you. Appreciate your time.
Anytime.
Sean Cathcart is Senior Economist and Director of Housing Data and Market Analysis at CREA. Coming up, Canada wants to be an AI leader, and that's attracting global attention. That's still ahead. But first, athletic wear company Lululemon may be beloved by the yoga set, but it is also a fan favorite for the knockoff crowd. And now Lulu is fighting back with a trademark on the term Lululemon dupe. The idea is that it can go after anyone advertising a product using that phrase. It's the latest front in an ongoing battle with people willing to trade an intellectual property that's been stolen. The only catch? To keep the trademark, Lululemon has to use it. Stay tuned for some very creative marketing. We're back after this. Welcome back. Canada is hoping to build on some early influence in artificial intelligence by building a thriving ecosystem here. France's Mistral AI is looking to expand in Canada, and it's on the hunt for talent and business. We talked recently with Marjorie Janiewicz. She's Chief Revenue Officer at Mistral.
Mistral thinks we are very well positioned to help Canadian businesses to make the most out of AI. For us, what's really essential is inserting into the technology the language, but also the culture in Canada into those AI systems, being able to deploy on-premise so that really sovereignty is achieved from a data perspective, and really enabling Canadian businesses to bridge the gap between proof of concepts and actually effective production systems that are useful both in the private and the public sector. So I think for us, the appeal is very much to collaborate with the ecosystem in Canada to help really Canada build a moat in innovation through AI.
And when you look for those collaborations, do you tend to look at, there's some big obvious names that are US-based, or can you find those partners here in Canada?
I think we can definitely find those partners in Canada. We have a lot of momentum in financial services, a lot of momentum in energy, a lot of momentum in the public sector. And I think a lot of great players in Canada can benefit from our technology there. So we see Canada as an important market for us, and we cannot wait to really cultivate talent, participate into the development of the ecosystem.
There's obviously a lot of enthusiasm about where AI goes and it's taken valuations off the charts with it. For businesses, it's a much more kind of prosaic view. Will this investment yield me returns? And many businesses are kind of skeptical about the near term of that. What would your argument be that this is an investment that they need to make now?
Yeah, I think it's such a great point, and I think you can read a little bit everywhere in the news that 95% of AI projects actually do not go into production. We think that the secret sauce is really very much about bringing the data in the enterprise into the systems, of course keeping that data their own, but really customizing those systems to the goodness that's within the enterprise. And if you do that, we see an acceleration path between proof of concept and production, and very successful projects that are leading to increased revenue, but also increase productivity. So to us, it's really adapting those systems, adapting the AI to those businesses that own really AI data as their moat.
And when you look to collaborate, does it tend to be with other developers, AI developers in this country, or with the businesses themselves? And I guess the reason for asking that is, where will the jobs be? Will there be additional jobs at AI companies here because of what you're up to, or will it be inside companies who need AI expertise?
Well, the answer is both. We enable developers in building applications and systems, but we also partner directly with the enterprises that are trying to either create new revenue opportunities or improve productivity. So the jobs can be created on the AI science side, but also unlocking new opportunities. So the jobs are really on both fronts, and we cannot wait to further hire in Canada to participate in the growth in the ecosystem.
And do you have a sense of what your needs might be in terms of hiring down the road?
Yeah, I mean, we are very fortunate to find in Canada great talent in Mila, in universities. So we will be looking for talent in the science side, in the applied science side, but we will also look across the board, go to market, sales, marketing, and all of that.
That was our conversation with Marjorie Janiewicz, Chief Revenue Officer at Mistral AI. Time for the takeaway and giving it all away. The deal this week between Canada's uranium giant Cameco and Brookfield Asset Management with the U.S. government should not pass by without a second look. The heart of the deal involves Westinghouse, the nuclear company owned by Cameco and Brookfield, and soon to be partly owned by Uncle Sam. Yes, another Canadian company in a strategic sector will be owned by the U.S. government, and with it, ready access to the fuel of the future, namely uranium. Is this just another cool financial transaction most Canadians can ignore? Not really. For one thing, it's part of a bigger trend of direct ownership by the Trump White House in private companies that should worry everyone. But for another, it ties up access to a key resource that Canada's lucky enough to be endowed with naturally. The world will need our uranium, and the first and most obvious customer is, of course, the United States. Yes, that same United States, which is currently bullying Canadian industry, shredding legal trade agreements, and generally walking all over us. Now might be the time to keep them from getting their hands on strategic resources like uranium, since it's one of the few things we have to negotiate with. Instead, the private market, if you can call it that when the U.S. government is doing the buying, is negotiating these assets out from under us. Our government could do more than take notice. It should fire a warning shot that we won't sit idly by and let our resources be scooped. That may well engender cries of government interference, but sometimes the role of government is precisely to interfere, and no time is more obvious than when the market is being perverted by bad behavior. Slowing down this transaction and, while they're at it, taking a second look at ownership stakes the U.S. government recently took in 2 critical mineral firms in BC wouldn't be so much interference as an intelligent response. My takeaway? Some people hate the elbows up analogy, but one time when it makes perfect sense is when you're in a corner and the other guy is fighting dirty. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.